Yo guys, welcome back to another video. So today we're simply going to be talking about the internal to external range bias model, right? Or how to simply identify your daily bias, right? Based on the characteristics of how price behaves based on a day-to-day basis, right? So yeah, let's get into it. I'm going to use bar replay that we're going to be trying to project the last few days. Let's begin at midnight, right? There. Okay, then now can make this full screen and then only refer to a blank sheet, right? Okay, here's how price works based on quarters, right? So simply you can have this range right here predefined, right? And you identify it as a full quarter range, right? So it can be Q1, it can be Q2, it can be Q3, it can be Q4, or it can be Monday, Tuesday, Wednesday, Thursday, Friday, right? Does not really matter as long as you have a fixed day range. So therefore, for example, when we are trading within Q2, which can be Tuesday, right? Initially, this range right here would be Q1 Monday, like that, right? And each individual range would begin from 18 to 18, right? Then same right here, 18 to 18, right? So all these are pretty much predefined, right? So 18 for Monday. If this is Monday, this would be 18 Sunday to 18 Monday, meaning that Tuesday initially begins at 18 of Monday, right? So if we divide this range into quarters like this, right? The full range, and then we can also divide this range right here into quarters like this, right? And then we can increase this like that, and then let's do this. Then let's paste it like this, right? So initially you have two quarter ranges, right? From Q2, from the beginning of Q2, right, to the end. This fixed range right here, this from Q2 to the next Q2, right? This is a full 24 hour range, meaning Q2 begins at midnight, right? At midnight to midnight, right? This whole entire range begins from the previous day range, whereby now this range from here to here is still a full 24-hour range. So we would set it as 24-hour, right? This one begins at the previous day, 6 to the current day range, 6, right? So full 24-hour too. So the one that we are referring to is the previous day one, and everything is set to New York time. So therefore it is UTC -5 New York. All right. Okay. Right now we're only gonna be referring to the previous day range, right, as internal and external range. So therefore we can mark this out right here like this for the profile that we'll be talking about, right? And then remove this like this, right? So when you have a low like this, right, and you have a high like this, then you have the close like that, make this a bit smaller like this, right? Then we can refine it like just so that it's a bit more perfect, if that makes sense. Then we can, okay, perfect. So this range right here would be identified at the previous day low. So if I can increase this and make it red like this, right, we can say this range is the previous day low. Let's mark it up. Then project it. Okay, perfect. Then we can project it to the right like this. So this is the previous day high and the previous day low, right? And then this one right here we would identify as the previous day high, right? And then place this at the top like this, then fix like this. So initially we have the previous day high and previous day low, right? This initially external range liquidity, right? Meaning that it's buy side and sell side, right? When you're trading, you initially divide your next day, your full 6 hour day, your full 6 to 6 p.m. range, right, into a full stagnant hour range, right? Meaning that each individual quarter, right, from the 24-hour range, you will divide it into quarters, right? So the first quarter range, right, let's make this red. Now let's make it gray, right? And then we're gonna make our text black. The first orange would be a full 6 hour, right? Then next 6 hour range. With 6 hour range, the next quarter range would be a full 6 hour range, right? The next one too, which is our PM, right, would be a full 6 hour range. So in total, what do we have? We have a full 24-hour range, right? So how do you trade from internal to external, right? The first quarter range is identified as accumulation. This is Asia, right? So therefore, we'd say this range, the first one, is the Asia quarter, right? Second one is our London. You can say London quarter. The third one is our AM, New York quarter, right? The third one is our PM, New York quarter, right? So in simple terms, what you're trading is accumulation, manipulation, distribution, right? London is known to be a manipulation. Asia, accumulation. New York, a distribution. So initially, when you have this predefined previous day ranges and you want to be trading internal to external liquidity, right? What you are looking for is you want to see price within the first 6 hour range accumulate, right? And your accumulation range is the full defined range when it closes, right? Then you want to see London sweep the high. Does that make sense? You want to see price sweep London if you're bearish, right? And this is how you pretty much get an indication that you're looking for bearish price, right? You want to see London draw above the Asia high or the first quarter high and the previous day high, right? And then Q3, which is New York, is gonna be initially a distribution lower from London, right? And then Q4 is either gonna be a continuation back to the previous day low or a reversal right after the equilibrium range of the previous day low range, right? So meaning that if we divide this range right here in half, right, if we divide it in half, we initially say once Q3 reaches the below Q1, the Asia low, right, and the equilibrium of the previous day range, you can anticipate Q4 being a continuation. But the sweetest point would be us looking to trade either the London or the AM New York session, right? Trade, right? So initially, right, when you're looking to trade London, you want London to begin the distribution range, meaning that therefore Q3 is gonna be a continuation lower, right? The characteristics of this happening is you're looking for this same micro model to present itself for London, meaning that when London sweeps the previous day high, right, you want to see within Q3 a micro session model, right? London forms the high of the day, then New York distributes lower, forming the low, and then now Q4 can be a reversal higher. So in simple terms, it would look like this: accumulation, manipulation, distribution, then back into the range. Then now if we're to project this into like a full candle, this range would be our open, right? That would be our high. No, this would be our open. This would be our open. This would be our high. This would be our low. And then this would be a close. So if we project a candlestick range like this, from the high to the low, like this, right? The open began here, then price we can say price closed right here. So therefore, that would be our full defined candle, right? Then we can make this look like this, right? And then we can remove this. The high, the low, London forms the high of the day, New York forms the low of the day, right? And then Q3 forms the close, and then the open of London, which is the end of Asia, forms the open, right? That's how you initially identify your whole entire previous day range, right? So right now we're going to be going into a live chart example, right? All this we identify on either the 1 hour time frame or the 90-minute. When we're in Forex, you can identify it on either one, right? Okay, so right now, from this time right here, this is the midnight range, right? This is the midnight range. We can have it predefined like this. Then we can remove this. We are gonna mark out the whole entire range from 16 here to here. Wait, 16. This range right here would be initially our previous day range. So therefore, this is the previous day high, right? You can say this is the previous day high, and this is the previous day low, right? So now if we divide this range like this, you have the previous day high and the previous day low, right? Then you outline the next 24-hour range, which is from 18 to 18, right? It's a full 24-hour range, 18 to 18. If you divide this range into quarters like this, right? If you divide it into fixed quarters like this, and here are the settings, right? Here are the settings. If you divide full range into quarters, right? Initially, if you're bullish, you want to see price sweep the low right here and then distribute higher, right? Or Q3 is going to sweep Q1's low, Q3 is going to sweep Q2's low and then distribute higher. And then if the high is met within Q3, then you can anticipate Q4 being a reversal, right? So in this case, our first quarter range would be this one, right? If we mark it out like this, this is Q1, this is our Asia range, right? So now we want to see how London closes. London draws lower, right, forming the low of the day. So this Q3, right? But the high has not been met yet. So New York is a continuation of Q2, right? So London began the distribution, right? Now, if we can go into a low time frame on this, right? Specifically the 15-minute time frame. What you're going to notice is if you divide this range into quarters like this, right? Is that we have the same exact model on just the lower micro cycle like this. This is London's Q1. This then becomes the manipulation range sweeping the Asia low, right? And the accumulation low, right? So if you can reduce the opacity of this so that it's clear. This is how it looks, right? Can't even hide this. This is how it looks. And then this would be the New York distribution, right? I mean the London distribution, and all this is happening during the London 6-hour range, right? Q2, I mean. So therefore now the low of the day was formed within London, right? Now the high of today, we're expecting that to form within Q3, and then Q4 can potentially be a reversal lower. So now, since we have this predefined range, this is how we want to be trading London. You're going to see London sweep the previous day low, right? The previous session low, and then Q2 should go below Q1 and all these lows, right? And then Q3 should be at distribution higher. Then our drawn liquidity would be potentially the Asia high or its equilibrium, right? Or the previous day high at best case scenario. So now heading into Q3, we want to see higher prices. Let's go back into the 1 hour time frame. Then we can move this because this will be a discussion or a discussion that's already been had based on the cycles, right? So this, we know this to be our manipulation range, which begins the distribution, right? Now Q3 sweeps the high. Can you see that? So therefore, when Q3 sweeps this high like this, right? What are we anticipating? Lower prices. If we can divide this range into quarters, what would we be looking for? Let's see. Let's go back to the 15-minute time frame. This is our accumulation, right? This is our manipulation, right? Then Q3 sweeps the Q2 high, right? Initiating the distribution law, right? Then Q4 is a continuation. Initially, we want to see price draw back into the range, but Q4 generally, it can tend to do its own thing, but this would be enough, right? And also, another key factor you want to focus on for this specific type of price delivery, right, is the fact that Q3 has swept Q2's high, right? So you would initially divide this range into quarters and then go into a lower time frame, like the 1 minute. And what you will see is the same principles. I'm not going to sketch this out, but the logic will apply. If you can see, Q1 sweeps the Q2 high, right? we get our manipulation, then initiation of our distribution. Then Q4 ignites our distribution range. Does that make sense? Yeah. So simply, this is the base model way of how you can identify if you're gonna be having a continuation. You're gonna be having a trade between external liquidity ranges. Because what price does, right, is it sweeps the previous day low, right, and it initiates distribution within London or New York, right? So you want to see how price closes within Q1. So if you're trading London, you want to see price sweep Q1's low and the previous day low. If you're trading New York, you want to see price sweep Q2's low, Q2's high, and the previous day high, right? Okay, now let's see. Then price distributes lower. Where does it go? Back to the previous day low and the Q1 low. So it's all fractal, right? So now if I can remove this, right, and then re-add it again to the current day, initially would be looking for the same logic. This is the open. This is the previous day range, right? So this is the previous day low. This is the previous day high, right? So what do we look for? Let's let it play out. Just let this one play out. Okay, perfectly. We're now within current data price, right? This is the previous day range, right? If I can divide this range into quarters, into a full 24-hour range, what is it that we notice? Price during London sweeps the low. Can you see that? And it also sweeps the accumulation low. So we have a higher time frame, accumulation, manipulation, and distribution. So therefore now Q3 was our distribution higher. Then Q4 will potentially be our continuation because the previous day high has not been met as of yet. So we're initially waiting for Q3 to be distributing higher, right? So now if we go into a lower time frame and want to focus on what's happening right here during London when it's distributing, right, we can add in a bar replay from here like this. Then we can go to the 15-minute time frame, right? Then now we know that we are within the Q3 range, so we can add in our indicator. All right, so we're gonna say only scripts, and then we enable yes. Then now this range has been made full screen, right? Wait for the indicator to load in. Then we can remove this. Then we'll be looking at the London profile, the London Q3 range, Q2 range, which is a full 6-hour range, which is this one, London session model, right? If you want this indicator, just be sure to hit me up on Twitter. It's still for sale for now. So yeah, what is it that we notice? Q1 has been swept, the London low has been swept, accumulation, manipulation, distribution. This is our continuation higher. What's our drawn liquidity? The previous day, the previous session high, and then we're anticipating Q3 to be a continuation of this. Right, then now let's see. Price draws in higher, right? So hopefully you found this video insightful, helpful, and yeah, if you got any questions, then just be sure to hit me up.